May profits be upon you. Welcome to another weekly market forecast. We're going to go over the S&P, the NASDAQ, the Dow, gold, silver, and oil. All right. Let's take a look at the economic calendar for the week ahead. Monday, no red folders. All right. When you want to trade during those times where there's no red folders, you got to be extra careful because the market can go all over the place because there's not uh, uh, that market liquidity to juice the markets to complete a breakup structure and a move up or down or whatever. To really shoot for it, it becomes a little less predictable. Right? You can still get moves now, but it'll be less predictable, less you'll see some stuff that are, like sweeps out of nowhere. So, you got to be extra careful. All right. Tuesday, Wednesday, and Thursday. All right. It's going to be a shortened week because uh, U.S. dollar, U.S. dollar. The U.S. is going to be the U.S. banks are going to be closed for 4th of July celebrations. All right. So Tuesday through Wednesday, Tuesday, Wednesday, Thursday, there's going to be good days to trade. There's going to be some liquidity. There's going to be some juice in the market. So those are the days you want to check out. Not the kind of market movers that could potentially reverse markets, except for non-farm payroll (NFP) on Thursday. Okay, so that can have the potential to reverse markets. So those are the ones you want to be extra careful about. That's going to happen at 8:30 Eastern Central Time in the morning. So you don't want to be in a market or in a trade rather uh, prior to the news. After the news, you can trade the move, fade the move. Once it makes its move, it may turn around and go in the actual intended direction. All right. But you have to just wait till the dust settles and you'll see let the market show where it wants to go. Where are the liquidity points? Right. All right. So we're going to start out with the S&P. Let's go to the S&P. Let's take a quick look. The month is about to end. We got one more business day for the month, right? It says one day, one day to go. All right. So I want to see how the market is going. Look how we cleared last month's high. All right, this tells you what do you call next candle uh, uh, theory. If the market closes above the previous candle when it actually runs that high, all right, not sweeps the high with a wick and then may go back the other way. When it runs the high and closes above it, that it shows intention and looks like the market wants to go to the all-time highs. All right, I like that strong candle. It displaced well above that of the previous weekly high, and we have a pretty strong close above these down close candles. All right, the bodies of these down close candles. I like this moving up. All right, that's just for a macro view of things. All right. On the weekly, last week, very strong bullish candle, hardly any wick on the bottom. All right. We closed well above the down close candles prior to it. Boom. This looks like we want to go higher. That's all there is to it. All right. This area where we closed above these down close candles, I like to call it area fair value. Right. And this makes a natural area of demand. Price could come back to that area and find its support for higher prices. All right. But uh, some people will market, sorry, some people will mark it down at where the bodies uh, open or close and leave it here. I'm going to go through. I'm looking at this whole area, so I'll start looking for setups as soon as it hits that high. For buys, all right, for buys as a retracement, ending the retracement down at the area where it comes into contact with our POI, our place of interest. Okay, see how price chopped about here, took the dive down, and then moved up. This is at the body, right? This is at the body. And it's a great place to put it. Look where the dotted line is, all right? That's where it intersects with a fair value gap, all right? A bullish fair value gap. Price did not return to that bullish fair value gap, turned it into uh, a breakaway gap, all right? Where you don't expect price to come back to it. It just moved up and created another imbalance over here. All right. So what am I looking at? I'm looking at a bullish market. It looks like we are intending to go to the all-time highs. Okay. And we have bullish fair value gaps to show that there is structure in place to support that idea. All right. See how we closed higher than the previous daily candle on Thursday candle. This is the Friday candle. Got a strong close above it. Maybe we'll see a pullback into this bullish fair value gap and then continue higher. Okay, and that's the scenario that I'm looking at. This line here is 50%. This dotted line here is 50% of this trading range. If price comes down here, I'll definitely be looking for a high probability trade to the upside, because this will bring us back from premium to discount. And discount is where you want to take your buys. Premium is where you want to take your sells, right? You can take a sell down into this if you want to, but the overall trend is up. All right. And I want to trade with the trend. Those are the higher probability trades. But you can take a perfectly good trade down to one of these uh, fair value gaps before price finds its footing and goes higher. But I'm looking for higher prices, and I'll be looking to see if we get a two candle connection. What is that? Well, two candle connection to the fair value gap here. Let me go down to the 4 hour, see if we see something here. These are that there is that daily fair value gap, but you see it on the 4 hour how it has responded to this 4 hour bullish fair value gap here. A very hard move to the upside. All right. That's a lot of respect being shown. I'm looking for price to probably continue higher from there, from current price action. Let's go to the 1 hour. Let me see, just to take a peek, Let's see what we got. Oh, yeah. Look, you see how it pushed down, pulled back up, closed it well above the previous candle. All right. And uh, this is showing that, the likelihood of price finding this low and tapping into this fair value gap, it might be a little less because of the way it closed. Look at the respect being shown to it, right? Swept these lows for liquidity and moving up. I can see prices continuing higher up until we get to that external range liquidity. This is an internal move, an internal range liquidity move, and I'm thinking that the next one will be an external range liquidity move. But if price takes this high, right, this becomes our natural area of demand. And if it doesn't go straight to the buy side liquidity, I'll be looking for price to come back to this for a high probability trade to the upside. This is a natural area of demand. So I am definitely bullish. If it continues up from here, I'll be looking for a tap back here. All right. If it does come into this daily fair value gap, I'm looking for price to find its footing here for a higher probability trade to the upside. All right. And NASDAQ, I'm looking at the exact same scenario. Right. You can see this V-shaped kind of recovery here. Oh, what am I doing? What did I just do? All right. Stop doing that. Let me go here. Hold on. All right. Demonstration. All right. I like this. What am I doing? How do you do this? How do you work it? Like this? Okay, there you go. All right. I like that V-shaped recovery there, right? But you see how the candle is right here. All right. That was last week's candle, closed well above. Now, NASDAQ is stronger than the S&P. How do I know? Because it's closer to the all-time high, reaching its all-time high here. All right, look at the S&P. Not as close. There's another high to come and get. All right. Uh, this one is the next high is the all-time high. Okay. Uh, and what do I usually do? I look at these candles that are like this, that close well above the previous candles highs here. All right. I like this. What do I normally do? I like to go down to the lower time frames to see if there are structure in place to support higher prices. And what do I see? We got a fair value gap here. That price did not revisit, just like in the S&P, and we got another one right here. All right, and I think, like I said, with the S&P, I think there's a good chance that price comes down and revisits this fair value gap and continues higher to the all-time highs. Now, is there a chance that price could do exactly like I just said with the S&P, continue higher? Yeah, you see how it gave this wick of respect here at this 4 hour fair value gap here. If we carry that out, you see how it was very bullish from there. You can picture price just continuing higher from there. You see the continuation this coming week. All right, and we have a very similar situation here. When it came down and pulled up, it closed higher than the previous candle. All right. Yes, there is a bearish fair value gap here. All right. Is price. This gives us a perfect thing to look at to gauge whether it's going to go up or down. If price takes out and continues higher past this bearish fair value gap on the 1 hour, if it takes out that 1 hour and gives a close above it, we know we're going to the all-time highs. That's it. That's it. If it shows respect and you see price closing below these lows, closing below the previous lows, you know we're going to the external down here to to these lows. I should put it that way. I'm sorry. To these lows and go into the daily fair value gap, the daily bullish fair value gap down here. All right. And from here, we could see price find its footing and then go. All right. But this 1 hour fair value gap will tell us all we need. That's on NQ. S&P has the same bearish fair value gap that I failed to point out in the beginning. Please excuse me. I'm doing the best I can here. All right. So if the 1 hour fair value gap fails and price takes that out, disrespects it, we're going to the highs. That's it. That's it. That's all there is to it. If it shows respect and gives us a two candle pullback from there and attacks these lows, we're going to the weekly of the daily bullish fair value gap where we can find a high probability trade back up to the upside because I am bullish in the indices. The Dow. I spent too much time on that. The Dow is very bullish. Left on the daily, we can see a daily fair value gap, and we are pushing higher. This may turn out to be a breakaway gap. Will price likely come back to a breakaway gap? No. Before going up? No. No, that's not the likelihood. Why? What did I just do? I went to the next one. Sorry. So if you just take a peek at the weekly, you can see it's a very strong candle, and I like to look to see if we got structure in place to support higher prices. I go down to the lower ones, and what do we see? We see that we have daily fair value gaps here. All right, are we going to continue higher? I think we will because this is a very strong close above the previous day's candle. If we go down to the weekly, to the 4 hour, I'm sorry. All right, you can see there was a 4 hour fair value gap here, and price came down to it and showed respect to it. I think the likelihood is that we're probably going to continue up higher. That's that's what I'm looking for on the Dow. All right, gold. If we go to gold, let's go to the monthly. The month is about to end in one business day. This is the monthly. Check it out. You see where we're at? So we're at all-time highs. Okay, this is the monthly. All right, I want you to see how these candles closed. Look at it. This is the all-time high up here, right? Last month we closed at a doji. We didn't quite reach it, but it was indecisive. We take out the high barely. We took out that high barely, and you saw the respect being shown to that high, to that premium array, and we closed well within the range of the previous candle. Look at the close. Look at the lower close than the previous close. Right. I like this. I like this heading down. If we go down to the weekly, you can see my like for the bearishness is well founded because you see this bullish candle was overtaken. 1, 2. All right, with a and we're probably going to get a strong look at that's with last week's close. That's last week's close, well below these up close candles. All right, I think we're going to see more bearishness to come. We'll probably be heading towards that low. All right, but uh, I'm looking for this move to have an internal move first, just like it did here. It moved internally before taking out the external low, and then we took out these external lows. I'm looking for external to internal. I'm looking for external to internal move, right? Before we go to the next external move. And what am I looking for? Bearish fair value gaps. You see that we respected this bearish fair value gap here, right? You can see it right here. We formed it, respected it, and dropped hard. In this daily candle, is there support for lower prices? All right. This is a very strong low, a very strong break of these lows here. We ran through that low. Let's take a look at the 4 hour. Let's take a look at the 4 hour. All right. What do we have? We have bearish fair value gaps. This is what I'm looking for. There's a good chance. There's a good chance price finds that bearish fair value gap and moves down. All right. This is an impulsive move. I'm looking for that correction to the impulsive move and then a new impulsive leg down. That's that simple. All right. And we have this structure in place to look for it, a bearish fair value gap. Now, we are running into some consolidation to the left here, right? Got this little consolidation move here, but I'm looking for price to move up and then down. All right. If we go to the 1 hour, can we see something? Can we see something? Nah, not much. We're just moving to the side. We have the consolidation. I'm looking for a sweep of these highs. I'm still looking for a sweep of that high. All right. We may get up to this high. All right. May get up to this high or this high. Those are the highs that I'm looking for. Because I'm expecting in the U.S. dollar index, temporary, very short term move to the upside, but more bearishness to continue. All right, that would mean uh, strength in the U.S. dollar, some more sideways in gold, a move up towards that fair value gap, and then another move down. That's what I'm going to be watching for in gold. If we look at oil real quick, all right, if we go to oil, you can see, help me find it. All right, that is the monthly, and the monthly had a strong push up. The wall broke out, strong push down. This was a lot of respect being shown. The break of these highs, a lot of respect, right, on the monthly. I'm looking for follow through. Look at that weekly candle. Look how strong it closed below the low of the previous weeks into this weekly fair value gap. Now, what I'm watching for is the fail or the success of that weekly fair value gap. All right. We're moving sideways in it right now. So what am I looking for? This is the weekly fair value gap right here. We plunge down into it. I'm looking for price to push up and then down. We may see a down directly from current price action. If we go to the the 4 hour, we can see it's still moving sideways. So I am more inclined, you see how it's moving down? I'm more inclined for it to make the sweep down and the failure of this weekly fair value gap. That's what I'm inclined to see. But we're going to look and we're going to watch and wait. Thank you for watching.